Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. We're taking a look at the post PCE morning, and I'll tell you, this is something we were talking about this morning in a session in the Sector Secrets Mastery. We'll do some pre-market futures trading from time to time around these hot zones, and PCE have been a pretty regular rotation when it comes to high impact events where there could be some pretty cool futures trade setups. And one of the things that we've seen this month is that on the previous Friday, Jackson Hole, Powell pretty much set it into motion that come September, we're going to get the first quarter point cut. And right now, the Fed Fund futures are actually discounting a potential quarter point cut each and every meeting between now and June of next year. Now, whether or not that'll happen is a whole other thing, and that brings me back to PCE. As long as inflation stays flat and cools, as opposed to jumping up, I don't mean a one tick move here or there, especially if it's forecasted and sort of baked into the cake. But PCE really has not become, it has now become not all that important. If I look back on the most impactful hot zones, apart from Powell's speaking engagement at Jackson Hole mid-month, the 16th, if you remember, we had retail sales really create quite a bit of price movement and volatility. And yesterday's pending home sales even created more movement than the GDP number that came out an hour and a half before it. So all of a sudden, we're really now in a world where as long as the inflation data doesn't deviate from flat to cooling, we clearly don't care about GDP, even though I know it's talked about a lot. There wasn't a lot of response to yesterday's GDP. Numbers around jobs, right? So that's always going to be part of the Federal Reserve's mandate, or at least it is. I don't know if it always will be, but it is. The health and the sentiment of the consumer. Pending home sales, new home sales can definitely be related to what the consumer is doing. Personal income, how much money is the consumer making? And then retail sales, how much are they spending? And then sentiment, what are they thinking? So going forward, at least for the remainder of this year, and if this Federal Reserve chooses to ditch the data dependence, that'll be a different conversation. For now, they've been pretty much entrenched in that data dependent meeting by meeting approach. That aside, because we can't control it, we can't forecast it. At some point, they will or won't ditch it. But right now, in terms of hot zones that we need to keep an eye on, they're not ones that really have come up the previous 8 months. And that's going to be, how much is the consumer? Well, are they employed? How much money are they making? How much money are they spending? And are they willing to buy a house or not? And it's really time to shift the metrics of market movement. And this has been a month that's really proven that to be true. So when you're looking at the economic calendar, and I sure hope you are, every week, I like to do that on a Sunday or a Monday morning. What are those events that we need to be keenly aware of? It's going to be in one of those 4 categories. So what the macroeconomic importance is of GDP, that's kind of, I'll tell you, unless it's the main GDP number that I've seen kind of be a little bit of an attention grabber has been the Atlanta Fed's GDP now number. Aside from that, it's a very different collection of data points that we need to keep an eye on. And that matters because these data points will then create the volatility that could be a trade, that could trigger a trade, that could trigger a target, that could trigger a stop. So knowing the clock and the calendar is so important, and some of those things are changing. So that's a quick heads up on that. All right. Next up is, let's see here, taking a peek at where we are post GDP. We're not anywhere special. If we take a look, and I'm going to look at from 2 a.m. forward, we've been lower than this. And on the economic data, we spiked higher, but pretty much we're in the range that was established at the European and UK Open, 2 a.m. Eastern, to the wick high of that 8:30 hot zone. We're really not anywhere in terms of anywhere new. We are, however, looks like it's still 23 minutes before the bell, but it looks like we are going to open above the previous session close, which is 56.18, which opens the S&P above that important sentiment line of where did we close yesterday, 4 p.m. cash close. NAS is the same thing, right? You can see the lower lows around 2 a.m. You can see the higher high we punched up to with the 8:30 data of the PCE, and we're still well above 19,445 and a half. Nowhere new. But when you take a look at the daily time frame, right, we are trading with a green candle, which is important for my metrics of bullish participation and expectation of more bullish price action. In other words, I'm not a bear, right? And if y'all caught the videos, and these are free videos, so I'm not, Charts and Coffee we've made available publicly for going on 3+ years now, and there's free videos that I put out twice a week. So if you want to keep up with some of the narrative, Rag, what are you in? I'm curious about what you're doing in the Sector Secrets Mastery, but can I get an idea of what you're thinking, what you're trading, what you're doing? Yeah, check out Charts and Coffee. That's a direct reflection of, well, obviously your questions, but also what we're doing in the Sector Secrets Mastery. Check out Top Tier Outlook at 6 p.m. on Sundays, and those free videos that I put out twice a week at the Simpler Trading YouTube channel. And you can check out my YouTube channel as well. I really do want everyone to get a good idea of what's happening in the broader averages, what's happening in the commodities, what's happening in terms of macroeconomics, so you can make a better decision. And our decisions in the room have been, especially this month, I'm happy to say, when we had the carry unwind, we didn't take any drawdowns. In fact, that carry unwind, not that I knew it was coming, not that anybody did, but that carry unwind was very much in line with things that we had seen for about 2 months, which was strength in staples, strength in utilities. We continued to buy things like Coke. We focused on things like gold and Newmont mining. So when you're putting aside that notion of what is everyone else talking about or what is everyone else trading, please remember, the minute we start any logic about what we're going to do, well, everyone else is doing it, please remember that everyone else would also include the 90% of traders that typically lose. So my barometer is, what are the 10% doing? And the 10%, I'll tell you right now, unless they're assigned a particular stock as part of their job, in which case they're not a retail trader. You and I were retail traders. I never make any illusions about that. My job is to manage my money and my risk, right? Which means I get to control my focus. And that means don't be afraid to look at something like Newmont mining and say, you know what? I don't give a rip about what NVIDIA does next. Don't be afraid to say, look, I'm much more interested in Coke, than I am XLK, right? Which is just another place that Apple, Microsoft, and NVIDIA hang out. Be aware of the fact that the watch list in the world of stocks and ETFs and futures is massive, and the symbols that are being talked about are not necessarily the ones that are on the move, right? And that's a lot of what we do day in and day out. We don't pick favorites. Well, yeah, we do. What's trending? That's always going to be my favorite. And by the way, I don't care if sardine futures are liquid and trading. If they're moving higher and there's good liquidity, I'll trade it as long as I understand what the hot zones around sardine futures are, right? So it just really doesn't matter. Find the trends, make sure they're liquid. Therefore, you can buy an option on them without the concern of illiquidity or wide spreads. Just focus on that, right? That's rinse and repeat. Okay, so as we go into September, we're seeing a little bit more risk appetite because Jerome Powell's been a little bit more verbally committed to the rate cuts. But we can still see here, month to date, it's not as if Staples has fallen off the top of the leaderboard here, but utilities have slid a little bit. But what's also interesting, what's joining, right? When we talk about participation, I don't care about broad participation. I care about what's participating, right? So if I'm looking at this here, and as we're ending the month, today's the last trading day of the month, what is ending the month positive? communications, basic materials from bottom to top. So communications, basic materials, industrials, gold miners, financials, utilities, healthcare, real estate, and staples. That's what's a positive on the month. And that's what I'm going to look at going into September. So if you haven't looked at some of those sectors before, maybe you're not paying attention to what's in basic materials. Say, Rog, can I go check out XLB at Yahoo Finance or ETFDB, or just Google it and find out what's in it and why it moves? Absolutely, right? Or just come on over to the Sector Secrets Mastery, and that's where we put the watch list together. And at that point, you'll be focused on things that have a higher inclination, right? The probability of continuing. Right? And I think that in a nutshell is watch list building, gang. And that's where a lot of traders get really fouled up, because this week everyone was talking about NVIDIA, and I really just tried to be firm but respectful on who cares. It's okay to say who cares. And really, who cares about the stock? Yes, it's going to have broader implications. But right now, does anyone look at this and see opportunity? I don't. But when I look at this, I sure do, right? Very different structure. All right, so let's just take a look at our questions here. And by the way, if you're having a challenge with the risk management, the position sizing, that's the holy grail. If some of these ideas around watch list building are foreign, or you think, Rog, it makes sense, I just don't know how, come check out what we're doing in the mastery. Or I want to give you all a heads up, because it's going to be here. I'm in this mode already. It's going to be here in basically a month. I've got a class coming up on October 5 where we're going to tackle a lot of those topics in the detail that, setting aside a Saturday and 4 hours will allow us to do. So if you're thinking, Rog, I really want to get a good jump start on not just next year, but the rest of this year, that's going to be a really great way to put some of those pieces together. Okay, next up, charts and coffee is great. Thanks. I'll be Ren. Yeah, we'll do charts. I'm going to do top tier outlook Sunday, and I'm going to do charts and coffee on Monday, because for me, I love trading. I love traders. And I just want to make sure I compartmentalize, right? And I find that if I can spend about 30 minutes to an hour, even on a Saturday or Sunday, maybe that's reading a trading book. Maybe that's looking at a sector that I haven't looked at in a while. Maybe that's just preparing for the upcoming week. Yeah, I love to trade. I just don't need to do it all day long, right? But on Monday, yeah, I love starting off my day looking at the charts, even if we have a holiday. It's not a holiday around the world, right? It's unique to the US. We can see what's going on. And yeah, we'll be here for charts and coffee on Monday. Absolutely. If I've got coffee, right, it just doesn't taste as good without some charts. All right. Would I enter NQ now? Enrique, would I enter NQ right now? Right now? Or would I do it now? No. Great question. So this is where I have this image handy. I try to keep this image handy, and I've had it around for a long time. And this is straight from a documentary called Becoming Buffett. Great documentary. I know he's not a trader, but I would definitely watch it. It's very, very good. And Warren Buffett has an image. He has very few things on his office wall, but he does have an image of Ted Williams. I love the Bo Sox. I was raised a Bo Sox fan. Ted Williams looking at, this comes from Ted Williams' book. And he actually has an image of this, and his face, Warren's face, is superimposed over Ted's. But this reminds us what we do as traders. The market is the pitcher. We are the batter, and we have specific zones in which we know our probability for a win and managing risk is far better. And that's what this image shows. So if I'm looking, Enrique, this is such a great question for this image. If I'm looking at my zone where I have an edge, as a day trader, it's going to be down. As a buyer, probably close to 19,445. Obviously it's 916, but if it were 936, that would be something I would be watching. If I'm going to be a swing trader, overnight exposure, something I'd like to take into next week. Now remember, Monday, the markets are closed. Tuesday, we'll all be back trading for the fall season. That would be down at 19,000, about 300. And what you'll see is what I'm trying to focus on are ideally green candles in the gray zone. Yellow is fine, but yellow's neutral. So yellow could be a short in the gold zone or long puts, or it could be long calls in the gray. Yellow, the gold is resistance, the gray is support, and that yellow is a neutral candle. Once it's green, like it was on the 19th and touching the gray zone, on the 23rd and touching the gray zone, I would like to see another green candle in the gray zone, and that'll get me long. So it depends on what our time horizon is, whether you want to be a day trader or whether you want to be a swing trader. And the zones and the risk management is a little bit different. And the implications of the calendar and the clock are a little bit different. These are all things we'll talk about in the class on the 5th of October. But just to give you a little bit of insight, if you want to be nimble now, Enrique, I would highly recommend on a Friday, keep it nimble, maybe the 1 hour chart, maybe the 5 minute, and feel free to go into the weekend for the most part flat over a 3-day weekend. Now, I will be closing out, by the way, speaking of flat, I know this is not part of the question, but I will be closing out the gold trade that we've had on. Those of you in Charts and Coffee know this is something we've had open for quite a bit. And I will be very likely taking Coke into next week. This is continuing to follow through, talk about focusing on where the follow through is, right? And then very likely, although I don't know, depends on whether or not the stop wants to cooperate. We do have a long position in Pepsi, which is another symbol in that XLP. And we also have TLT, which we actually already hit the first target on. But if it can continue higher, I'll carry that into next week as well. All right. So that's what I've got going on. And then if NASDAQ can meet some of that criteria, maybe next week, Enrique, I'd definitely keep an eye on that. Okay. MX says for what is FTW? For what it's worth? For what? Sometimes I'm not up on these acronyms. Great call. It's still going. Yeah. And that is what I love about having a leader in a sector like staples, right? Rising tide. Defensives have been very, very solid, and Coke's been the outperformer. So absolutely, I will continue to buy those dips in Coke. Oh, for the win? Oh, that's what that means? For the win. Oh, I like that. Okay, I'll have to remember that. What are my thoughts on Bank of America? Sure. Let's see. Actually, let's do it this way. JR, let's take a look at it in that relative performance type way. All right, so let's see. Oh, by the way, these were the notes. If for those of you wondering, Rag, yeah, what do you do in your mastery? We keep notes like this every session. So if you're ever curious, Rag, what are you in? What are you looking at? Aside from the alerts we send out for the swing trades and our position trades, we keep active notes in the room. So, if you're popping in or popping out of the room because of any number of reasons, we keep individual notes. So you can go back later, review them. And I always keep them on the screen so we have really good communication of what I'm looking at. We don't call audibles in the room. But by the way, Bank of America, I would say no, not no as in I don't want to buy it, but no as in I think there's some better setups. In fact, I think I missed a great trade in Visa that one of our members grabbed a few days ago. So Visa, JP Morgan, American Express, and Chubb. But I missed a gorgeous daily price movement. I love when I miss trades because that just tells me there's more opportunity out there than I can keep up with. But one of our members grabbed this and their long Visa, green candle, gray zone, right? If you're not checking out those daily price movement ranges, which by the way, don't tell anybody, that's going to be part of the class. So we'll definitely give y'all a really good deal on those if you've been wondering about kicking the tires on them. I would pass on Bank of America for now. Look at the candle color. JR, that's a top tier candle, neutral. I'd pass on that for now. Oh my gosh, I'm running over. But the last part of your question, do I give any credence to dark pool? None. Zero. No. There are other and better ways to understand where size is weighting. I give zero credence to that. It's a buzzword. It's a catchphrase. It's kind of one of those things that people are told they should keep an eye on, but it's very difficult to measure a metric that reported to FINRA is so delayed. Yeah, there are better ways to do it. So I do not. I love the idea of understanding size, but I do not subscribe to that one. So thank you for the question. Gang, as always, thank you so much for being here for Charts and Coffee. Thank you for keeping this show running for 3 years. Otherwise, I'd be talking to nobody but maybe my cat. So thanks for being here. I'll see you on Monday. I'll see you on Sunday as well at 6 p.m. for Top Tier Outlook. Be good to each other, gang.